Okay, so these are lesson 3. For those of us who maybe have not watched lesson 1, lesson 2, we have lesson 1, lesson 2, and this lesson 3. If you've gone far or you've gone to an extent in trading, lesson 1 and 2 might not be for you, but I believe there might be some things you can also benefit from it. So today we're looking at a very important topic. If you want to be a trader, you want to be able to trade anything, not just crypto, you want to trade forex, stock, or binary, or anything. This is the beginning, this is the basics, the beginning of technical analysis, support and resistance. So we should be able to understand what support and resistance is and how to make trades with support and resistance. So, so this is the content, just like before. What we'll do, we'll recap on our last lesson, then we'll look at the meaning of support and resistance, we'll look at the types of support and resistance, we'll look at how to draw support and resistance, then the principles of support and resistance, the types of support and resistance retests, then support and resistance trading tips. Then we're going to conclude. So please, from number 5, 6, and 7, they are the most important to me because they are that's where we get ideas on how to trade, how to really understand and read the market. From number 2, 3, 4, they are more like the foundation, like theories for us to know. But from 5, 6, 7, they are the key important things. So I'm going to be very fast with 1, 2, 3, 4, so that we can quickly get to 5, 6, 7. All right, so last lesson, we looked at what a price chart is. We talked about the market data and candlesticks elements. So candlestick is a foundation to support and resistance. So we need to understand candlestick before we can talk about support and resistance. So please, let's make sure we understand what candlestick is. By now, I assume we know what a candlestick is, what the open and close of a candlestick is, what the high and low of a candlestick is. We also look at candlestick formation and different types of pattern. I gave us a chart. We can get that chart, print it out on our own or have it on your phone, and you just need to stare on those things so that you can get used to them. From last week lesson, the key takeaway is that mastering candlestick shape and pattern takes time and practice. So when you spend time on it, it becomes your second nature. So please, let's try to master those candlesticks. It takes time, but with time, we'll master it. And one takeaway also from last week was that higher time frame are more important than lower time frame. So even if you are trading a lower time frame, always view the higher time frame to have a better view of the market. So let's get into today's topic, support and resistance. What is the meaning of support and resistance? You can call them level, you can call them structure, or you can call them line. So support line, not support life. It's a typo there, typo error. Support line or level is a line or a zone that connects points of equal price. It connects points of equal price and it prevents the price from falling below it. We'll see diagrams to that. It acts as a base floor that bounces and reverse, that makes price to bounce and reverse up. So it's a line that connects points of equal price, and that line prevents price from falling below it. So that's why we say it's like a base. It's acting as a base. So when price gets to that line, price is going to bounce back. It will bounce up. Resistant line is the opposite. Resistant line or level is a line or a zone that connects points of equal price, and it prevents price from rising above it. So resistance is like a ceiling or a roof. It's like a ceiling or a roof. Just imagine you are in a house. The house has a floor and it has a ceiling. So the ceiling is your resistance. The floor is your support. Now at support area, when you're at support, buyers support the price from falling lower by their buying pressure. And at resistance area, sellers prevent or resist the price from rising higher by their selling pressure. I'm going to draw, I think, let me not start drawing. We'll see a lot of diagrams to explain it. So, but let's just try to get this, let's get this theory. So at support area, let me quickly go to a diagram just to make it clear. Now, this support line. So this is a price, as we know, this is a price chart. So this is a line, this is a support line. So this is price falling down, went up, bounced back again, went up, came down again. So there's a line there. And that line, which is this one, is supporting the price from falling. It's supporting the price from falling, it's supporting the price from going below it. And don't forget, we said support line. They are lines that connect equal points of price. It's a straight line, so it's connecting equal points. Yeah, 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 and yeah. It's connecting equal points of price. And it prevents the price from falling below it. You see that the price is unable to fall down below that support. So that's why we call it support. It's supporting the price. Supporting the market is holding the price from falling down. And remember here we said it acts as a base floor where price, this should be price, where price bounces and reverse up. So at support, price is going to bounce back and price is going to reverse up to go back to the sender, something like that. This is it. Price came down here and the price bounced back to the sender, came again, bounced back to the sender. So that line is called a support line. It's supporting the price from falling back, falling below it. So that's why these definitions too, they make sense. So on the at support area, buyers support the price from falling lower by their buying pressure. Now, when you have more buying, price is going to rise. So which means at this level, this support level, you have buyers there, more buyers are there. So they are buying more. So the simple principle is that when you have more buying, price is going to rise. And when you have more selling, price is going to fall. Okay, so on the other hand, resistance is a line that connects price of equal points. Resistance is also a line that connects price of equal points. You see it? Yeah, 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 and yeah. Those are price and they are of equal points. So now for resistance, which we said is like a ceiling, it's preventing the price from going above it. Resistance is preventing the price from going above it. So once the price gets to resistance, it falls back. The price gets there, it falls back. The price gets there, it falls back. So this is a support line and this is a resistance line. So it's as simple as that. So continuation, meaning of support and resistance line or levels. So let's take note of those words. Some people use line, some people use level. We can also use structure. So when I'm using all those words, we mean the same thing. And sometimes I will use zone. I'll show us. Now, reversal point. Take note of something. Anytime price gets to that support or resistance line, they reverse. So that's why we said here, technical analysis use support and resistance levels to identify price points on a chart where there is a higher probability that the price will pause or slow down or reverse its current trend. So the price, when you get to any of these two levels, the support or the resistance level, price is going to do, most probably, price is going to slow down or is going to reverse. Reverse means, look at it here. Look at it. So price is in this direction, coming in this direction. But when it got to the support line, what happened? It reverses. It reversed back. It reversed. You see, reversed. So when you get to a support or a resistance level, this is the normal trend price was going. But when you got there, the price, it reversed back. So when you are getting to support level, price is either going to slow down or is going to reverse. So something that is not in this slide, please take note. When you are setting your target price to sell, you have to watch out for support and resistance. That's just by the way. But it's just to help us to set our target when we want to sell or buy. You use, especially when you want to sell, you look for a resistance line. Oh, the price is rising, Doge is rising. This one is just by the way, but let me quickly explain to us. This is a market now that I'm monitoring. I hope you can see the screen. This is a market I'm monitoring and it's live, it's Doge. This is Dogecoin. So now, because I'm not going to be on the screen monitoring it, so I had to do something. I checked the market and I saw that when Doge is about approaching this level, when it approached that level, something is going to happen. It's going to reverse. This trend now that we are seeing, let me just. Now this trend we are seeing, when it gets to this level, don't forget this is a resistance level now. This is a resistance level. So when Doge gets to this level, this place, it's either going to pause, it will be slow in reaction, it's going to pause, maybe do something like this, maybe do something like this. Oh, sorry. Do something like this. It's slowing down. It's like ranging. It's ranging. It's not going to an upward trend as such. It's ranging, or it's going to do something like this. Most probably. However, there's also a probability that it's going to break it. Later, we'll talk about breaking. It's going to break it and go higher. But this is just to tell you that when you are setting a target to buy and sell, you have to note where support and resistance is. Okay, so let's go back to our slide. So technical analysts use support and resistance level to identify points on the chart where there is higher probability that price is going to either pause, slow down, or reverse its current trend. At support, we expect a trend to pause, slow down, or to reverse. The same thing at resistance, at support, we expect a downward trend to pause, slow down, or reverse. Similarly, at resistance point, we expect an upward trend to either pause, slow down, or reverse. So market psychology plays a major role as traders and investors always remember the past and they react to it. So this is like a self-prophecy, self-fulfilling prophecy. Because what I'm telling you now, look at me. I came here now to say, okay, I'm going to set my support and resistance line. My resistance line here, this is a resistance line, and Doge is going up. So when Doge gets to that place, it's going to reverse. There are millions of traders too around the world that are also looking at that level, and they are going to sell. Some of them, they are going to place their sell order at this particular point, $0.082. Okay, so that's because we have memories, and that's why we look at past data. So we are looking at the past data of the market, and we saw that, oh, when Doge got to this level, it came back. When Doge got to this level, you see it rose to this level and it came back. It fell. So we have that memory, and that memory is going to tell us that that same level that Doge got to and made it to reverse, there's a higher probability that the current trend, which is an upward trend, now when it gets to that same level, it's going to reverse. So many of us, many traders will just place our sell there. So if I'm doing the same thing, you are doing the same thing, many other people in the world, they are doing the same thing. It makes the market to become a self-fulfilling prophecy. Something like that for us. However, that's not always the case, because sometimes price is going to get to that level and just go higher. But the thing is about probability. What is highly probable, that is what is most likely to happen, is that price is going to get there and reverse. Now look at this support level I drew here. You see it. Price got here. Price got here. This is still Doge. Price got to this level. It did not really, though it reversed, but that reversal was more like a slowing down. You see it? It was like a slowing down. Later, price went up. You see? Now it got to that same level, but it did not come down yet. It didn't come down. This did not happen. What happened was that the price broke it. So we're going to talk about breaking of support and resistance line. So let's quickly look at the types of support and resistance line. Now we have horizontal support and resistance line only. Then we also have horizontal support and resistance flip. This is where a support line turns to a resistance line, and a resistance line turns, or a resistance line turns to a support line. Then later we're going to look at trend lines. Trend lines, they are like diagonal support and resistance. You know, here is horizontal support and resistance. Why trend line is like diagonal support and resistance. So let's look at these different types of support and resistance. Let's look at the diagram first. Please get these diagrams in mind. They are helpful in explaining things. Okay, so what are we saying? This is an horizontal resistance line. We can see price went high, it hit the horizontal line, it came back. Went up again, hit the horizontal line, it came back. So this is an horizontal resistance line only. Why this is an horizontal support line only? We can see price came down, the support line held it, price went up back, came down again to support line, went up back, came back again to support line. Now this is horizontal resistance, horizontal support. Now we also say we have horizontal resistance. We have support or resistance flip. Now this is a resistance line at first, but the resistance line now became a support line. It could be confusing, but don't get it wrong. Initially it was a resistance line, but when it broke, when price went above it, it now became a support line. Yeah. So the same thing happening here. This is a support line, but it broke and it became a resistance line. So this is called S arrow flip. S arrow flip. S arrow for support and resistance. We'll see it in the diagram. I'm going to show us in diagram. So this is a still on types of support and resistance. This is a trend line. A trend line. So this lines here, they represent price action. Price went down, came up, down again, went up, down again. So this is a trend line. Now this is a trend line, a support trend line. Why this is a resistance trend line? Now there's something we need to know when drawing a trend line. We're going to do practicals. I'm going to draw it for us. But notice that when drawing a trend line, if it's upward trend, you have to draw it as a support line. When it's a downward trend, you have to draw it as a resistance line. Now this is still like a trend line, but a trend line was broken. Now this trend line, this is showing a downward trend. Price went up, came back, went up again, came back, went up. Is a resistance line, but it now flipped. Flipping means the price broke it and it started acting as a support line. All right, so let's quickly go to the chart now and demonstrate all these things. Now, last lesson I told us we can use trading view for analysis. We can use trading view for market analysis. So I'm going to go to trading view now and quickly show us some things we can do there. Now this trading view, we have the website. Just go to tradingview.com. It helps you for chatting. For those who will be using computer, and you can also use it on your phone too. But for technical analysis mainly, computer is better, a laptop or desktop. So for for something you need to know here that you can use, you have this tool. You can come here and you have cross or dots. You can see the cross. That's cross. I can change it to a dotted line. You can change it to a dotted line. I can change it to just an arrow, you see, but I like using the cross so that I can see both the horizontal, which is the price. The horizontal is showing you the price movement. Then I can see the vertical, which is the time as well. That's one thing we should know. Then another thing we should know is the line. What else again? We need to know the line chart. Now this line chart helps you. What do I even call it? This horizontal ray. Yeah, horizontal ray. You see, I click on it. Then I can come and say, okay, I want to draw my support and resistance line. Let me go to daily chart. I want to draw my support and resistance line. You know, I'm on it now. That's why it is highlighted. I can just come here and click. Let me delete these previous lines. So this is the line I've drawn. You see it? Now, if I don't want this short one, if I don't want this short line or half line, like I call it, I can use this horizontal line, this full one. This one is going to draw the line across for you. See it across. It's going to draw it across the chart. But I don't like using that one. So I like using this short one, this half one. This half one is just going to take it from where you want and take it to extend it to the right. Another thing we need to know about this, another important feature is this magnet. This magnet helps you to magnet a price. Now, when I'm on, okay, let's say I hover around this price now. Because of that magnet, it will magnet the price for me. If I hover it, it will just take my cursor to that price. So that's another feature to use. Then what other feature again? What else? Let me see. Line, trend line. Okay, trend line. We have a magnet time frame. Okay, trend line also. I forgot trend line. You can use this trend line as well. Maybe you want to draw. You want to draw from here. See it. You want to draw it. So that is a trend line. You can put it here. Trend line. So those are some important tools. Then in case you are doing analysis, you like this line now, you don't want this line to show. I'm on 4 hours chart. If I don't want it to show on 4 hours chart, I can just click on the line, then come to setting. I come to setting. Under setting, I come to visibility, then choose. Then I can now choose. I want that line to appear. I want to see it on a weekly chart, or I want to see it on a monthly chart, or I want to see it on a daily chart. So whichever one you click, it helps your chart to be clean. makes it not to be too cluster, because if you click a if you put a trend line on hourly, put it on daily, put it on monthly, put it on weekly, it will be too clustered, especially when you are doing a lot of analysis. So sometimes the line you draw on a daily chart, you don't want it to appear on a weekly chart. So what you just do is you click on it, you come to visibility, and you untick. Okay, I drew this one on a monthly time frame. I don't want it to show on a weekly time frame, so I'll just unclick it on weekly. If I unclick it on daily, it will disappear. You see, that's disappeared because I clicked it only on weekly. I enabled it only on hourly. So if I come to an hourly time frame, it will appear. But if I go to a daily or weekly time frame, you won't find it there because I've made visibility to be on. I made visibility to be on hourly alone. Okay, so that's another feature to use. So that's about there are a lot of other features there, but I think those are the common ones that we'll need. So how to draw support and resistance line. I have some charts already that we'll just go to. All right, so these are charts. How to like pre-draw them to save time. So these are charts. It's obvious this is a resistance line. I took it from here. And it went across. So we can see how it reacted. Here. Price came up here, it went back, came up here again, went back, came up here. So we can see. But this is what they call a fake out. It was as if price broke. When you say price, we'll come to what breaking means. When price goes beyond, above that line, then we'll say price has broken support or resistance. Now in this case, we'll say price has broken resistance. But price came back again. See, it went up, broke resistance, but it came back again into this area. So that's why it is called a fake out. It's called a fake out. So you can see the resistance price got there, it still fell. And this is a Bitcoin. Yeah, this is Bitcoin chart. It's a recent chart. So that is resistance for us. Let's look at support. This is a support line. So you must have, before I forget, you must have at least 3 touches. At least 3 touches. Okay, and those touch must be it must not be too far. It mustn't be too far. Imagine if this touch was not there, if this was not there, and if this was not there, and it was just this one and this one, that line is not too valid. It's not too valid because the distance is too far. So that's why when drawing your support line, make sure they are almost evenly spaced. Okay, the lines are almost evenly spaced. So this is a support line. We can see it. Price came here, the line supported, price went back. Price came here again, that line supported it, price went back. It came back again, that line supported it. It came back again, the line, price keeps bouncing. So it was this one now that I think took price. This one took price. Okay, price did not break this one, but from here now, price just went all the way. Okay, so that's support. So a simple okay, we'll come to trade ideas on how to use all these things. But that's support line for us. Then we talked about support resistance flipping. So this is an example of support and resistance flipping. We see this resistance. This is the fake out we looked at. This is still the same Bitcoin chart, but this is in a shorter time frame now. I mean a broader, how will I call it? A bird eye view. So this is the fake out, resistance. Then this is what we call a breakout. Price actually broke the line. Every support and resistance line at a point in time they get broken. When they are broken, we said price has broken support or broken resistance. So you see, this was a support line. This was a resistance line, but here now our resistance line is acting as support. After this break, price went down but did not come to this area again. What happened? These are resistant line. We've been having resistance from here to here. It has been resistant all through. But when we add this break, then our resistance became support. Our resistance line became support in this place. So that is the resistance line that flipped to support. Okay, so those are okay. So how do we really? Let's go to a live chart. Let's see how to really draw these lines. Now I'm on Doge. This is Doge coin charts and it's a live chart, as you can see. I'm on. Let me take 4 hours. I'm on 4 hours. Let me delete this guy. I'm on 4 hours. Now I want to draw support and resistance. I look at the. Let's check what this thing says. Now use the most recent lows before a breakdown, or most recent high before a break up. I'm going to we'll explain what a breakdown and break up is for us. But from the last chart I showed us, breakout, we should understand what breakout is now. When your support line has been invalidated, your support line is no more acting as a support, or your resistance line is no more acting as a resistance. Your resistance line has been flipped. It now became a support line. So there was a break in that line. So that's what we call a breakout. But I think for things to be more understandable for me, I call it a breakdown if the price is breaking down, and I call it a break up if the price is breaking up. So when we want to draw a line, use the most recent lows before a break. Here, let's just look at it here. Now, let's look at this line now. Now, this, you notice that price has been going up here. Upward trend, upward trend, upward trend. You see this is an upward trend, but at this point, I will draw my resistance line here, because when price got to this level, it came down. So I draw my resistance line here. And at this point, there was a break in your resistance line. Now, this line, if I should extend it to the back, I'll discover that it coincides with other line. That's why it's a resistance line. But because traders, we have the what is it called? We always form the habit of analyzing past data. So let's not make a mistake. Let's always try to analyze charts from, how do you call it now? From right. Yes, from right to left. From right to left. So go in that direction, meaning that give more